Hi there. Today we break down the 2026 corporation tax rates and HMRC's 40% small business tax gap. If you run a UK company, this video is essential for accurate tax planning.
Hello and welcome. Now, if you're running a small or medium-sized business here in the UK, what we're about to cover is absolutely vital for your finances in 2026. This entire guide has been put together by the tax experts at ProTax Accountant to give you a really clear roadmap for what's coming up with corporation tax. So, let's get straight into it. Let's start with a number that might just shock you. 40%. Yeah, you heard that right. According to HMRC's very latest data, a massive 40% of the corporation tax that's due from small businesses, it's just not getting paid. This isn't some small rounding error, it's a huge gap, and it's putting businesses just like yours right in HMRC's line of sight. So, what does that 40% actually look like in cold hard cash? Well, it adds up to a jaw-dropping £14.7 billion shortfall. That's £14.7 billion that's missing from small businesses alone. And that one number, that's exactly why HMRC is now shifting its focus with an intensity we really haven't seen before. Okay, so to help you get your head around all this, we've broken today's discussion down into 6 key parts. First, we'll look at HMRC's big problem. Then, we'll see how they're cracking down in 2026. After that, we get practical. We'll cover the tax rates, how to actually calculate what you owe, and crucially, how to dodge the most common mistakes. And we'll wrap it all up with a clear plan for you for 2026. Right, Section 1. Let's properly unpack this £14.7 billion problem. It's what everyone calls the tax gap, basically the difference between what HMRC thinks it's owed and what it actually collects. And as you're about to see, small businesses are now right at the heart of this issue. Now, take a look at this. It's fascinating. You might hear a lot in the news about big corporations, but look, they only make up 12% of this missing tax. Now look at that enormous slice of the pie. Small businesses are responsible for 60% of the entire UK tax gap. This right here is why you're now HMRC's #1 priority. But here's the thing, and this is a point that catches so many people out. This isn't really a story about deliberate criminal fraud. If you look at the data, the single biggest reason for this gap is a failure to take reasonable care, followed closely by just simple human error. Put those together, and that's nearly half the gap, caused by honest mistakes, not people trying to cheat the system. Which leads us perfectly into Section 2. When you're faced with a $14.7 billion hole in your finances, you're going to respond, right? Well, that's exactly what HMRC is doing. And from 2026, their whole approach is becoming much tougher, far more digital, and laser-focused on SMEs. You could say the era of winging it with your finances is well and truly over. So, what does this crackdown actually look like? Well, first, it's about people. HMRC is hiring 5,500 new compliance officers. Second, it's technology. Their AI system, which is called Connect, is constantly scanning over 30 different data sources, from your bank accounts to your online card sales, looking for anything that doesn't add up. And third, it's about power. They now have a new self-correction power, which lets them force you to amend a tax return if their AI thinks there's an error. The bottom line? Your chances of getting checked are higher than they've ever been. And listen, the financial sting of getting it wrong is getting much sharper. You'll definitely want to hear this part. From the 1st of April 2026, the standard penalties for filing your corporation tax return late are going to double. So that penalty for being just 1 day late, it jumps from £100 to £200, just like that. And on top of that, if your business has a lot of equipment, the rate you can claim tax relief on it is also being cut. Okay, so we've covered the problem and we've covered the risks. Let's move on to the solution. Starting with Section 3, getting the 2026 rates right. Now, the good news is that the rates themselves are staying stable, but it's absolutely essential that you understand the 3-tier system we're all working with now. Let's break this down. It's pretty straightforward. If your company's taxable profits are up to £50,000, you pay the small profits rate of 19%. This is where most small businesses are going to sit. If your profits go over £250,000, you'll pay the main rate of 25%. Now, for profits that fall in between those two numbers, you enter this tapering system called marginal relief, where your tax rate basically climbs up on a sliding scale from 19% towards that 25% mark. But, and this is a big but, here's where it can get really tricky. And you'll want to stay with me on this because this rule catches so many entrepreneurs out. It's called associated companies. Now, in plain English, it just means that if you control more than one company, HMRC views them as being linked together for tax purposes. And this table just perfectly illustrates the trap. You see, if you have just one company, your nice 19% rate applies all the way up to £50,000 of profit. But if you have two associated companies, that £50,000 threshold gets sliced in half. Suddenly, each company can only earn £25,000 before tipping over into that higher marginal relief band. If you've got multiple businesses, getting this right is absolutely critical.
Right, let's move into Section 4 and make this all a bit more practical. We're going to use a really simple example just to see how these rules actually work in the real world, without getting bogged down in all the complicated formulas. Okay, let's make this simple. Imagine a lovely little cafe in Manchester. They've had a brilliant year, and their profit comes in at £80,000. So the first step is to subtract any allowable business expenses and capital allowances for things like their coffee machine. Once they have that final taxable profit figure, they can see which tax bracket they fall into. And at £80,000, they are sitting squarely in that middle band, which means marginal relief applies.
So once that marginal relief calculation is done and dusted, the final corporation tax bill for our Manchester cafe is £15,450. Now the actual formula behind that is a bit complex, but the principle is simple. Because their profit is between those two main thresholds, their final tax rate ends up on that sliding scale somewhere between 19% and 25%.
Now we're at what is probably the most important part of this whole discussion, Section 5, how to avoid the common errors that add up to that $14.7 billion tax gap. These are the exact red flags that HMRC's new AI systems are literally programmed to find, so paying close attention here is your absolute best defense.
So, what are these classic mistakes? Well, first, just missing the filing or payment deadlines, which, remember, now comes with double penalties. Second, claiming for expenses that aren't allowed. Third, making a mess of your director's loan accounts. Fourth, having figures on your tax return that just don't match up with your official company accounts. And finally, just plain old poor record keeping. And don't forget, you are legally required to keep all your business records for at least 6 years.
And here is a pro tip for you, straight from the experts at Pro Tax Accountant. Always maintain a clear separation between business and personal expenses. It sounds so simple, doesn't it? But getting this wrong is one of the quickest ways to trigger an HMRC inquiry. It is a fundamental habit for good, clean compliance.
Okay, let's pull all of this information together in our final section. Section 6, Your Plan for 2026. This is a clear, straightforward checklist of things you can start doing right now to make sure your business is prepared, compliant, and most importantly, protected.
First up, if you are still using spreadsheets to run your business finances, it is time for a change. Switch to proper accounting software. It automates so much and it will dramatically cut your risk of making errors. Second, be absolutely meticulous with your records. Third, always review everything before you hit submit. Fourth, be crystal clear on your profit thresholds, especially that associated companies rule. And finally, the most important step of all, if you are in any doubt whatsoever, please seek professional advice. Guessing in this environment is just far too expensive. So let's end with one simple question for you. We've seen that the penalties for getting it wrong are doubling, and we know that HMRC's AI is constantly watching. So the crucial question is this: is your business truly ready for this new landscape in 2026? Now, before we finish up, it's really important for me to state that this information is for general guidance only. It doesn't constitute formal financial advice. Think of it as a starting point for your understanding, but you really shouldn't rely on it alone to make your financial decisions. To make sure your business is fully prepared and compliant for everything that's coming in 2026, we strongly encourage you to have a chat with the experts at Pro Tax Accountant. You can reach them on the details you see on the screen now, and for more essential updates like this one, please do subscribe to the channel. Thank you so much for your time.